And a put spread, and this is probably really basic, but it's a credit spread where we sell one put strike and we buy the other using the same expiration date. Now, there are other strategies where we use different expiration dates, but this one is a straight credit spread. And it is purely an income strategy. It's designed to collect premium. And so we receive, premium for taking on a risk. And we usually sell very high probability spreads to reduce that risk, similar to like what an insurance company does when they, when they take a policy on, they collect a premium, and hopefully they don't have to pay a claim out. So that's the real basic. And so this slide just basically says it's a solid strategy, because in general, most stocks or the whole market tends to increase over time. If you look at a long-term chart of the index, the S&P, the Dow, the Qs, it kind of slopes upwards, so, kind of a 45-degree angle. And this is a strategy, if you're bullish on a stock, then this is a great strategy. Or you may not be overly bullish about a stock, but you don't think it's going to decline to where you're selling the put. So it could be actually in a sideways pattern. You could put this trade on. And it's also known as a bull put spread. Some people call it just a short put, meaning they sell the put. That's the it's basically set up again. You sell one put option, you're buying another at a lower strike. So, and we'll do a lot of examples, but and most people trade these as out of the money spreads. It gives them more margin of error. Now you can actually sell a put spread right at the money. And I've been doing that on some other strategies. And what that does is it greatly increases your credit and it reduces your risk. So sometimes you can set up a trade where on, say, a $5 wide spread, you can collect $2.50. So the most you could lose is $2.50. And the most you make is $2.50, as opposed to, you make $1 and you risk $400. So, but you don't, on that strategy, you don't have any leverage or downside protection. And so, and again, the further you go out, the less credit you get. So any questions on any of that so far? It's pretty standard.